Tax evasion, there's no statute of limitation.
Really?
Your hotel, your airline ticket, all of that is deductible because it is ordinary and necessary. There's a few things that I share with entrepreneurs to do. I don't care if you're just starting out or if you've been in business. Number one,
Hello, Blue Nebula family. I want to personally welcome each of our BNC agents who are watching to the very first episode of our new series, Building Beyond Commissions. This series was created intentionally, not as extra content or some type of filler, but as an extension of who we are and why we exist as a company. At Blue Nebula Consulting, our purpose is bigger than making sales. Our company purpose really is to preserve the legacy of funeral service and Black capitalism, and we do that by helping professionals just like you build sustainable, scalable, and significant lives through disciplined sales execution, personal growth, and intelligent business strategy. We do not exist simply to increase commissions. We exist to elevate people. We exist to strengthen families, and we exist to build leaders. Building Beyond Commissions is about helping you think differently, not just as an agent, but as a business owner. Not just as a producer, but as a strategist. Not just as someone who earns income, but as someone who builds assets and legacy. And sometimes the greatest threat to a commission-based professional is not a lack of income. It's a lack of structure, strategy, and financial literacy. One of the greatest tragedies in commission-based sales is this. We produce an extraordinary revenue year over year and still fail to build lasting wealth. Today, we are changing that. In this episode, I am joined by Blue Nebula's trusted, licensed, and certified public accountant, Sharon Reagan. So if you are a 1099 professional, if you are producing meaningful revenue, if you believe you are working hard but not yet building optimally, this conversation is for you.
Hello and welcome. Today's conversation is one I'm genuinely excited about because it addresses a topic that directly impacts our agents' income, peace of mind, and long-term wealth, tax strategy, and financial structure. For those who may not know, selling pre-need insurances as an independent contractor offers incredible earning potential, but it also comes with responsibility. How you structure your business, manage your books, and prepare for taxes can either accelerate your financial independence or quietly hold you back. Joining me today is someone who has been an essential part of my own financial journey for over 15 years. My CPA, trusted advisor, and strategic partner, Sharon Reagan. She has worked with me through multiple stages of growth, including my transition from independent contractor to an S corporation, and has helped ensure that my business decisions were not just profitable, but most importantly, sustainable and compliant. Today, we're going to ask some questions that many agents really should be asking, but oftentimes don't. Questions that can help you keep more of what you earn, reduce stress, and build a business that works for you and not against you. Whether you're a brand new agent, a seasoned producer, or someone considering the next level of growth, this conversation is for you. Let me present to you my colleague and friend, Sharon Reagan, CPA. Sharon, thank you and welcome to our session.
Well, first of all, let me say thank you for giving me this opportunity to do what I love, and that is share information to entrepreneurs so that entrepreneurs can leave their legacies behind in their families, their children, and the world. And so I'm honored to be here. I'm very excited. And so thank you for having me here.
Thank you. It's a pleasure for us. So I've got a few questions here that we'll go through. I think I'd like to start with this first one. So for a commission-only agent that's just starting out, what are some of the most common tax and bookkeeping mistakes you see, and how can they be avoided early? Mind you, the majority of the individuals that are watching are primarily independent contractors. I'd say of our team, 75 to 80% of them are independent contractors with a few LLCs and maybe one or two S corps. So most common tax or bookkeeping mistakes that you see, and how can they be avoided early on?
Okay, those are two very good questions. And thank you for telling me the percentage of the viewers here that are sole proprietorships.
Yep.
We call it disregarded entities. One member LLCs and sole proprietorships are what we call disregarded entities.
Huh.
And so common mistakes that I see are not getting a CPA to advise you. Because some people just want to make the money, and because they're not really aware of a lot of the tax breaks, they pay more taxes. Two common things that I see happen with sole proprietor is when they cut themselves a check, they deduct it on their tax return out of their Schedule C-4, and that's incorrect. When you pay yourself, sole proprietorships cannot draw a W-2, which is one of the reasons why people transition sometimes from a one-member LLC sole proprietorship to an S corp, because they want a W-2, because W-2s matter when you want to get loans, you want to buy a house. Lenders love W-2s. And so that's just one of the reasons. But I see that a common mistake when people try to do their own taxes.
Yeah.
The second thing with the bookkeeping piece is we're in a technology age, and I still see people not putting their books on a computer, not buying a software, having someone key their data in so that they can project not just where they are, but where they want to be.
Yeah.
The third mistake I see is people treating their business like a hobby versus a real business. And so mind you,
What do you mean by that?
what I mean by that is some people focus on, well, I want to take as many deductions as I can so I don't have to pay too much in tax.
Okay.
And so a hobby is just something that you do to make extra money. You're not really focusing on the long-term potential of what you're doing. You just want to make some money,
Yeah.
right? You just want to make some money. You're not focusing on, but this business has the potential for you to set up your own retirement plan. When you're a sole proprietorship or one member LLC, you can pay Social Security on your net profit and Medicare. So when you get a certain age, you can collect Social Security.
Yeah.
If you don't make money off of your business and you don't pay into the Social Security and Medicare fund, when it's time for you to collect it, you won't be able to collect it off that business. So a hobby, you don't take it seriously. You don't automate your records. You don't hire somebody to give you tax advice and legal advice. You don't hire somebody to help market your business, which is very important. Your team is amazing.
Thank
have
you.
a great marketing team because you have to market today. You know, people knock social media. I get clients that research me on Better Business Bureau. They go to Better, I pay that. They go to Better Business Bureau to find CPAs. They Google. And so that's the difference. And so I tell people all the time, especially if I see that they're having multiple years of losses, that we have that hobby loss conversation.
Huh.
Why haven't you turned this? Why hasn't this business turned over to be a profitable business? Because if you ever audit it, that's the same questions the IRS is going to ask. They're going to ask, how much time do you put into this business? What kind of marketing do you do? They're going to ask some of the same questions that I'm commenting on right now. And I've been in this tax business for over 40 years, and I've seen a lot. I've seen a lot of things that cause people to be audited. I've seen another mistakes that I see people make. Say they work from home. They want to write off their mortgage. They want to write off the utilities, and they're all on the wrong line.
No.
They're all on the wrong line of their tax return. And these are common mistakes because people try to do their own taxes instead of having a professional do.
Yeah, you bring up a really good point, which is one of the questions that I had here is what triggers audits for independent contractors most often, and what do you think agents can do proactively to stay compliant?
Okay. When I do my workshops, there's a few things that I share with entrepreneurs to do. I don't care if you're just starting out or if you've been in business. Number one, if you ever have an audit, you need to have a separate bank account for all your business transactions. Things that trigger an audit, because disregarded entities are audited more by the IRS than any other entity, because small businesses have a tendency to misstate deductions. So let's say, for example, I see tax returns where people have all these round numbers. Everything is 1,000, 200, 500, 10,000. Trigger an audit because it looks like it's made up. It looks fabricated. That's number one. Number two, excessive mileage deductions that are uncommon to your type of business.
Yeah.
So say, for example, you work virtually from home, you do all your business from home, but you have this high number of business miles on your tax return, and you don't have your mileage law. A common thing that will get you in trouble if you ever audit it with the IRS is if you're claiming mileage and you don't have a written mileage log that shows day one. And if you haven't done this, you need to do this. Your odometer reading should be in your appointment book on day one. Your odometer reading should be in your appointment book December 31st. When you go to see clients, when you go to Office Depot to get supplies, you should have your mileage logged in, not on an app, because the code says, is it written?
Wow.
The Internal Revenue Code says, is it written?
Okay.
Right? So you want to have who you saw, the address that you went to, the miles going to the client, the miles going from the client back to your home. Most disregarded entities work from home. So that is your office.
Right.
So when you leave your office to go anywhere on business, it's business miles. A common audited area is the write-off of your automobile, which I'll get to, because even with the Big Beautiful Bill, which I encourage anyone that's watching this today to download the Big Beautiful Bill for business owners, so you can see some of the deductions for business owners. Because if you use a car for business, there's significant tax deductions. It's also an audited area if you don't write off, if you don't write down your mileage. So what they do is they create for me every year a January to December Excel spreadsheet, and sometimes some of them put it all on one spreadsheet. In the left-hand column of the Excel spreadsheet are all their expenses. I tell them, put everything down there. Let me decide if it's going to be tax deductible.
Okay.
On the horizontal side of that worksheet is January to December.
Right.
Keep a folder of all your receipts. You can do an A through Z folder because you do have to have your receipts. And you keep that Excel spreadsheet up to date. Now, mind you, unless you're an S Corp needs to be automated.
Yeah.
Don't even try it. If your business is an S Corp or a personal service corp, you need to be automated. I'm an advocate of business owners having quarterly tax analysis done so that you can see what your bottom line is going to be when it's time for you to file. That's another mistake that I see entrepreneurs make. They don't have their taxes forecast. They wait until April, and then they're either happy or they're not happy.
What would you say are the smartest ways to manage estimating quarterly taxes so that you don't have a lot of stress or surprises because that income fluctuates?
That's a great question. The first recommendation I say is agents should not try to figure that out.
Okay.
Let's just say you're married and your spouse has a W-2. The spouse withholds taxes, right? You've got this business that you set up a solo 401k. You set up a simple IRA. You set up already some type of retirement plan in your business. You have expenses. You're going to write off your car, portion of your car. You're going to write off mileage. You could bring your income down. Your spouse absorbs some of the taxes, and your tax bill will not be as high as if you had just held back 40%. Because what you've done, you've given the government a tax-free loan of your money that you don't earn interest on. So that's a common mistake I see with small businesses in general, not having their taxes forecasted.
I've always thought this to be kind of tricky, but I believe you can give a little insight on it. And that is, what income level should somebody that is an independent contractor or sole proprietor realistically consider forming a LLC or electing S Corp status, and why? Like, is there like a break point where, I mean, I know there's other taxes that they're subject to, I think one is called self-employment tax or something like that. But then when you switch, the rules change. What income level would you say it makes sense for them to really consider it? Or would you say they should just kind of come out the gate day one and set it up? Like,
that's a great. I love the way you said that.
Yeah.
It depends. For example, I have a couple of physicians that are one-member LLCs. They are Schedule C. They don't want to change, and they might net $100,000.
Okay.
After expenses, but they're not disciplined. They know they're not disciplined enough to move to the S Corp status.
Ooh.
They're not. They also know that they're putting money into Social Security, self-employment tax, Medicare tax on the net profit from their business.
That's as an LLC or as a sole proprietor?
A one-member LLC and sole proprietor are both the same.
Gotcha.
And generally speaking, LLCs are very popular because they can only take the assets in your LLC. If somebody tried to sue you, right? So if I got a client doing about $100,000 a year, which I have one in particular, she knows she's not disciplined enough to be an S Corp. Because first of all, she likes the fact that she gets to write off a portion of her home. She also likes the fact that she has certain benefits that would go away if she was an S Corp. So it's really not income based, it's client based, because you still will get to write off your laptop, computers, all of that. I do suggest though, if someone is going to move to the S Corp, that everything should be in the S Corporation's name. So I tell people, if you're going to buy things, if you're going to move to an S Corp, here again, you got to get advice. Yeah. You want to look at things like, are you going to sell your business one day? Are you going to leave this in the family? Are you going to have your business pay for your health insurance? Do you want to set up a retirement plan? Do you enjoy the simplicity of a one-member LLC? It's the most simple form of business, but you pay more taxes on it. Some people don't care about that. They said, Sharon, I don't want to get into all that. I want to keep it real simple. I said, well, you do realize you're paying more tax. They're okay with that.
How long do you need to keep paper receipts?
Okay.
I got some receipts from like early 2000 Y2K receipts that I could probably just have a shred party and get rid of it. But then in the back of my mind, I'd be like, well, I'm going to just put it in this box just in case. But I'm thinking to myself, I probably don't need this. I could use the space for something else.
I tell people this is what I tell people. And then if you go to www.irs.gov and Google retention,
Yeah.
they'll tell you. I will keep it simple and say, if you have not filed a fraudulent return, if you are not guilty of not filing at all, you don't get rid of any of yours, because tax evasion, there's no statute of limitation.
Really?
But in general,
Yeah.
I tell clients, keep it for 5 years.
Okay.
Okay. And if you really are concerned about that, we're living in days where everything is in the cloud, right? You can scan certain documents into the cloud. Keep your wage and tax statements for about 5 years.
Okay.
Right? But the safest thing to do is to go to www.irs.gov and Google retention.
Okay.
And it has a whole schedule of the type of documents and how long you should keep them.
How can I take full advantage of the in-home deductions, and what are some of the rules for qualifying and calculating that deduction? I guess for those that are primarily sole proprietor or individual LLC. I know it's a little different for the S corp.
Oh, yes, it is. And I'm glad you asked that question, because I was getting ready to talk about office at home.
Okay.
Okay, so some people say, okay, Sharon, and the exception to this rule that I'm getting ready to talk about are daycares. They don't fall under this exception. They don't fall under the general. They're the exception to in-home daycares. But generally speaking, here's the deal. If you are a disregarded entity, sole proprietorship, one-member LLC, and you work from home, that portion of your home has to be exclusive use. It has to be used primarily for your business or where you meet clients. So sometimes clients ask me, well, I do all my paperwork from home. Okay. Once upon a time, that did not fit the bill. But today, if you're a business that has to write up a lot of things, send out invoices, things like that, it's your home is your business. So the rule with that is, and people always want to know what can they write off, right? And I always say, I'm going to say this, I'm going to qualify this to say, you need to make a profit to be able to deduct that office and home deduction in the year that you make a profit. If you don't make a profit, you don't lose it, but it sits in a bucket until you make a profit.
Oh.
So if you already have a loss where your expenses exceed your income, you won't get the office and home deduction, but there are certain deductions you will still get regardless. For example, you use your home primarily for business. Can't be your basement, because we know that you entertain. Most people entertain in their basement, right? I have one client that has one section of their apartment that they use for business. They have one corner in their apartment. They've already measured out the square footage. They use that.
Yeah.
That's not the ideal thing. The ideal thing is to have one room in your house exclusively for business. And I also advise clients to take a picture of that room and file it away. Right? That room cannot be used for personal use at all. You can use a separate attachment. Some people have separate attachments on their home. Some people have a basement where they have one area in their basement, preferably not where the area that you entertain. If you have another office in your basement, I have a Mary Kay person. They use their garage to store their things. But if you use it primarily for your business and you don't have another office somewhere. So people say, well, what can I write off? All right, so let's just say you're renting. You're renting a home. You have a legitimate lease, right? Because I have clients that rent. So you find out what the square footage is of that one room that you use for business over the total square feet of your home. And so let's just say you use 10% of your home for business. So you take your rent, you multiply it by 12, you get to write off 10% of your rent, 10% of your utilities, 10% of if you have renter's insurance, you get to write all that off. And I'm gonna do renting first, and then I'm gonna do owning.
Okay.
If you buy specific things for that office, you get to write that off. So the flip side to that is, say, own your home. You pay mortgage, pay interest. I see people write off their mortgage payments. Big error. Okay.
Huh.
Big error. You get to write off, say, the same 10% example I just gave. So say you pay $20,000 in interest, you get to write off 10% of that.
Yeah.
But the other 90% is going to go right on over to your itemized deductions, because you're going to have personal and you're going to have business expenses in your office and home. Then you get to write off a prorated share of your mortgage insurance premium, prorated share of your real estate taxes, prorated percentage of your homeowner's insurance.
Yeah.
Lights, gas. I only do water if you're a beautician.
That makes sense.
Okay. Pest control, all those things that you pay for your entire home, and you get a percentage based on the business percentage of that space that you use for business. Some people say, well, what happens if I can't use the office and home because I lost money this year? Well, you don't lose it. It sits in a bucket, and you get to carry it forward once you earn money.
Yeah.
Now, your real estate taxes and your interest are going to be 100% deductible regardless, right? But the other expenses will be held in a bucket until.
Gotcha. You talked about mileage and the importance of, tracking that. In terms of it, are there additional travel expenses that can be deducted? And should a person that's an independent or sole proprietor or one person LLC attempt to try to buy the vehicle in the business's name, or is it okay for them to just kind of keep it and then write off, maintenance? Are there other travel expenses associated with this vehicle that they can write off?
That's a great question. You have to keep your mileage. I recommend to people, I personally have a Chevron gas card.
Okay.
Because I don't want to have to keep up with gas.
Yeah.
I just want to get my card, total up the gas, and be done.
Got it. Yeah.
I tell clients, if Chevron is not the answer for you, or a similar type of card, get a credit card. American Express is good with this. Bank of America, a lot of these, Capital One, they'll send you a summary at the end of the year of everything that you spent. You have saved yourself and the tax preparer a ton of time that you don't have to pay for, because you brought them the summary of everything that you spent.
Yeah.
So streamline your expenses. That's what gets cumbersome for entrepreneurs, is we're not streamlining how we're spending things, right? So just get yourself a credit card, a company that will download your transactions for you, and you don't have to calculate that. So what can you write off? Things I see people miss. The interest on your business automobile. All these things are subject to the business percentage of that that vehicle, over the total miles that you drove that year.
Right.
So you have interest on your automobile. That's a missed deduction for a lot of people. Okay? AAA, parking. If you buy cups for your car, if you buy rugs for your car, gasoline, repairs, replacing your tires, all of those things are deductions based on the business use of your automobile.
Okay. So the rapid fire, I'm just going to do a little rapid fire, ask you a question. Hey, is this something I can write off? And then you can say yes, no, or maybe. Okay. So I'm on my way to an appointment. I hit a pothole, bend my rim, and I've got to get a new rim for my car. Can I write it off?
Is your business card used for business?
Yeah.
Car used for business?
This is the car I take.
Yeah.
I'm tracking everything.
Yeah.
I'm headed to an appointment.
Yes.
I hit a pothole, bent my rim. Now I got to go get a new rim.
Yes.
Okay. I want a self-help book. I heard about a book. I ordered a few books on Amazon about business, about sales. Can I write it off?
If this is an ordinary and necessary business expense for your business, Yes.
I've been working out. My suits don't fit like they used to now. So I need to go buy some new suits because I wear suits when I make my presentation. I need to look a certain way, look professional. Can I write it off?
I'm glad you asked that. And I have the same answer. No. But if your suit has Blue Nebula Consulting on it, Rashawn Brown, CEO, that now has become a personalized business suit
Ah,
that you don't wear everywhere.
right.
Right. But if we just happen to buy nice clothes, nice shoes, nice persons, no.
Yeah. Interesting. Okay. I gotta go to a conference, and it's a big sales conference, and they're gonna talk about insurance. They're gonna talk about pre-need. They're gonna talk about these different things. Can I write off the flight, the hotel, and all the food I eat?
Because you are traveling away from home. I presume this is away from home.
Yeah.
Yes. If you're traveling away from home and your meals are not lavish or extravagant.
Just for me. I can't blow $1,000. It's just me sitting there.
It has to be business related. There should be a client somewhere. Let's just say you have team meetings for your team. Certain meals are not just 50% deductible. Some meals are 100%. So we can talk about that as well. But if you leave your home for business, your hotel, your airline ticket, all of that is deductible because it is ordinary and necessary.
If you can give one piece of financial advice to a high producing agent who wants to be and really wants to build like long-term wealth, not just high commissions, what would it be?
There's 3 ways that you build your wealth. It's through ownership. Either you're going to own an investment portfolio, you're going to own a home, and you're going to own a business. There are so many types of retirement plans. For high income earners, there's what we call a cash balance plan, where you can save like over 200 grand. You can put that away and it's a deduction. Use your business to build your wealth.
Yeah.
If you've got $100,000 net or $50,000 net or even $25,000 net, set you up some type of retirement plan. So let your money start working for you. That's how people build wealth. You build it one of 3 ways. Your home is a great wealth building asset because if you have equity in your home, you can refinance your home, pay off consumer debt that you cannot write off, right? And with having the business, in addition to a W-2, a lot of my clients, the spouse is W-2, the client is sole proprietor. It's a great combination.
Yeah.
But use your business to build your wealth. And it's not for the weak.
Yeah.
It's for those that have the faith in knowing that this is what you're supposed to do so that you can make a difference with your family, with your community, for your church, and the world. And so those are the type of clients I work with that see themselves beyond just making a few dollars.
Yeah.
People that want to see themselves bigger than that.
Our conversation today wasn't just about avoiding taxes. It was about understanding the rules well enough to win within them. If you're serious about your future, your finances deserve the same level of professionalism that you bring to serving families. Everyone here at Blue Nebula appreciates the value that you add to our company, and we pray your continued prosperity and long life.
Amen.
Thank you so much.
Amen.
It has been wonderful.
Thank you so much. It's been my pleasure.
Thank you.